let's talk a little bit more about the tech trade. NVIDIA trading near record highs as tech, per usual, big driver of the market's push higher. The tech sector, is it poised to remain the market leader? That's the big question. Our very own Josh Schafer joins us now at the desk. You've been digging into this and this leadership that we've seen from tech in this rally.
Yeah, Brad. So, you have the S&P 500 back near record highs. Of course, NVIDIA also back near record highs, as you mentioned, right? And so the question I've sort of been posing to strategists over the last week is, okay, well, if we go higher, what takes us higher, right? What's sort of this next leg of the bull market? And I think it's interesting because you sort of hear both sides of this trade, right? Like the folks over at Citi that just moved up their S&P 500 target at 6,300, they're still talking about growth as defensive. You think about a lot of these companies, NVIDIA would probably be included in that, maybe an Apple, really all of them, right, are cash-rich businesses. They're businesses that can do well if rates stay higher. But what I thought was interesting, different take from Richard Bernstein over at Richard Bernstein Advisors. He had a note out calling it the mid-7. And so when I talked to Richard, he highlighted this chart. This is the percent of stocks that have outperformed the S&P 500. Of course, those two little lines you see over the last 2 years are 2023 and 2024, right? That was your Mag 7-led rally. Well, pick your head up. Stocks outside of the Mag 7 have been doing very well thus far in 2025, right? You've seen a lot of outperformance from a lot of the other sectors. I think 7 of the 11 S&P 500 sectors are outperforming the index. And so Bernstein's sort of making the point that as growth slows for that Mag 7 cohort. Yes, the earnings year-over-year growth is still strong, but it is slowing, right? That rate of change is coming down. That might make the case for perhaps some more of the 493 and some other areas of the market to be areas where you can play.
I just didn't expect for mid-7 the Gen Z vernacular to make its way into Richard Bernstein analysis here. It's mid right now.
Sometimes it's just mid, Brad.
You know, as we talk about that leadership, Aadil, what are you anticipating from the Mag 7, especially as we're looking for this diversification within portfolios right now?
Yeah, so we do think that these companies will continue to do well because what happens is that there's a lot of expenditure that is going into artificial intelligence. There's a lot of government policy that is supporting artificial. There's deregulation also happening. And that makes us believe that because of the productivity that these companies are bringing about, because of AI-related productivity, that's going to cause GDP to increase as well. So we do think that the Mag 7 will continue to do well, but one of the problems we see, we deal with a lot of retail investors. One of the problems we see is that people are like overly concentrated in the Mag 7. You know, like they'll have 60 to 70% of their portfolio in tech-related investments. That's where we want to put the personal finance hat on, and we want to say that this can be treacherous. Make sure you're broad, because to your point, there are a lot of other sectors that are doing really well. AI doesn't mean that only Mag 7 will do well. There are other sectors that could do well also.
Has that rebalancing started to happen among clients yet? Because I feel like April was maybe a wake up, or February to April was a little bit of a wake up call, right? A lot of those stocks got hammered pretty significantly, but then you had the strong come up really over the last month and a half now. Are clients starting to really wonder, like, okay, should I rebalance here? Did I just hold NVIDIA, it did really well, and now it's too big in the portfolio?
Well, this is where the behavioral finance comes in as well, because people don't want to sell NVIDIA, like they love it, right? So, and where others were being aggressive end of last year, we were being defensive. We were saying, all right, take a pause, take a step back, right size your exposure to these companies, increase the breadth of your portfolio. So we have been doing it, but I do feel that the ordinary retail investor that is having a do-it-yourself approach is overexposed there. If you look at the S&P 500 by itself, that's more than 40% in tech right now. And if you add a few other technology companies in the portfolio, now you're 50, 60% in tech, right? Okay. That's the ordinary retail investor that has a do-it-yourself approach.
And so with that in mind, there was a competitive issue that all of these companies, to your point earlier in the year, had to move through, which was, okay, what's the risk of a DeepSeek? Yeah. And investors having to wrap their minds around that. At the same time, knowing that they were going to be investing these Mag 7 businesses, investing heavily, and the capital expenditures were what they were going to be measured on and how quickly they could deliver that return on investment here. I mean, how far out should investors be expecting for some of those massive multi and $100+ billion sums to actually be accretive into the business performance and bottom line?
Yeah, so we do think that it's going to be sooner rather than later. We do think that what a lot of people are underestimating right now is that, just when the internet came about, right? When the internet came about, there was huge productivity increases, right? In the same way with AI, there's going to be huge productivity increases which is going to translate into GDP growth, in our opinion. So that is why our thesis has always been that this budget deficit issue is a problem, but there's a strong possibility that we can grow out of it as well.
And you had sort of mentioned, I think earlier, utilities as one way to maybe play that AI expansion, right? But I'm curious, other sectors, right? Do you see opportunity? And some folks we have that we talk to, Brad, talk about maybe retail, right? If they're able to use AI, and then they obviously could boost margins through less workforce, et cetera. I mean, how do you think about the spreading of AI and sort of where else that trade goes?
Absolutely, that's a fair point. So retailers, industrials. One of the companies that we like is Eaton, for example. And they make the equipment that is used to transmit the electricity. So, and utilities, no one was talking about this. This was one of the most boring sectors ever. It's one of the best performing sectors now, right? So there are ways to play this AI boom by having exposure to other areas, because a lot of businesses are going to benefit. Even in our business, in the wealth management business, we are seeing AI-related benefits, right? So we do think that that's going to help other industries, not just tech.
Appreciate that, Aadil and Josh. Josh, thanks for hopping on the set with us.